Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The highs from 2019 and 2021, specifically the August 2019 high at 18,850, the June 21 high at 18,610, and also a nondescript high from May 2021 at 18,265. All these halted a decline from earlier this year in July, and in turning back up started a new pattern. I'll go on to that in a second. The move originally higher only lasted until the start of August, when the market hit up against the overhead combination of the flatlining long moving average, currently 25,360, and the then short medium moving average, currently 22,430, and the August 2011 high at 25,195. Prices managed to get to the August 2011 high, but failed to close above any of these resistances at that time, back in August, and we saw prices head back down again. This time prices only reached down as far as the May 2014 high at 21,610 and the February 2014 high at 22,155 before gathering some further resources during August. Then in late August, the market was pressured down enough by the declining short-medium moving average that it briefly tried lower, but as this attempt was quickly snuffed out, leaving behind a small island top above the market. Then in early September, the market punched up and through the short-medium moving average. We saw further exploitation of that break, but only as far as those same key resistances as before, the long moving average and the August 2011 high. At this time, there was a new factor entering the frame. The declining medium moving average, currently 23,055. This looked like it might be a repeat of the action back in early August when prices clashed with the declining short medium moving average. However, the action in mid-September looked like a significant attempt higher, closing over this medium moving average for the first time since early June. Once again, the move up was stifled by that flatlining long moving average and the August 2011 high at 25,195, such that from the high water mark in mid-September, prices dropped back below all the moving averages and were finally halted by the February and May 2014 highs, as well as the new uptrend. The new uptrend formed since mid-July, currently at 21,750. This new uptrend is, I suspect, key to what may be happening next. Something I've mentioned before is becoming more and more significant, and I quote, "The action since mid-July is reminiscent of a possible ascending triangle, though as I said earlier, it is still early yet. This also goes for any idea of a bull channel." End of quote. This idea of an ascending triangle, which is currently 21,750 to 25,360, is seemingly the key to the current situation. Even now, as prices test the lower trend line, it's still too early to start looking at targets, as the chances of a false break, much as we saw on the upside back in mid-September, are quite high. But the pattern build-up continues to look good. Now, whilst I cannot give any direct targets in either direction at this time, I can give an idea of the potential size of moves that may occur using just the data I have already. Okay. So for a confirmed break below the trend line, the primary target would be in the region of $2,355 below the break of the trend line. And with a harder to reach secondary target, $5,350 below the break. For a confirmed break of the upper trend line stroke long moving average, then a primary target would be in the region of $3,745 on top of the break. And for a harder to reach secondary target, it would be $5,350 on top of the confirmed break. I would suggest keeping a close eye on that triangle going forward. LME 3-month zinc. I'd often spoken about how on occasion I'd taken a step back and looked at the monthly charts here to get a better picture. From these occasional actions, I've noted two patterns in operation. The principal pattern is the 2015 to 2020 bullish Andrews pitchfork. The most recent events involving this pitchfork have been the approach and rejection from testing the lower time, currently at 27.72, made in late September. The move back up from this rejection of even testing this time was halted 2 weeks ago. As above, we had and have a hell of a lot of resistances. In no particular order, these are the resistances. The slowly falling long moving average, currently 35.56. The declining medium moving average, currently 32.71. The 50% Fibonacci of the April to July move at 36.82. And finally, the second large strategic pattern that I saw in the monthly charts. The lower trend line of the large 2020 to June 2022 ascending expanding wedge pattern, and that's currently at 37.87. This second pattern broke down in June, so a retest up to the trend line in August and a later drop that includes all the subsequent moves lower. Now let's look and see what this second pattern, this ascending expanding wedge pattern, has left us with. Well, the primary target has already been achieved, but the secondary much harder to reach target X1 at 2082, which is way below the bottom of my daily chart. It is still alive as a target and out there, though obviously way lower. Now looking at the prospects for this target X1 being achieved, I would say it would be fair to treat this at the very least as a longer term target prospect. Yet there are a few more immediate patterns that I'd like to discuss prior to such a move lower. The first is the May to August bearish Andrews pitchfork. The market is moving down beautifully, currently in between the upper time, currently at 31.29, and the middle time, currently 24.57. Then there are two possible more recent patterns to look at. It's a choice as to whether the late May to date action is a possible bearish halfway hesitation or a possible double bottom. It all very much depends on what the market will do at the June 2021 low at 28.10, which we are seeing the market gradually inch towards. We're already set up for a double bottom. However, this week has been different and the question is again open. I suspect that we will have an answer by early to mid-November, as that is when the upper time of the bearish Andrews pitchfork meets and crashes into the June 2021 low at 28.10. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.